Bitcoin has seen a short-term correction towards 64,000 as a 7-day long uptrend failed to sustain. Will Bitcoin continue toward the downside, or are the buyers about to step in? Let's go ahead and find out. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope everyone's having an excellent week. In today's video, we are going to be going over the short-term price action following the recent failure to break over 67,000 and short-term correction. Has this correction changed anything on the macro charts? Will Bitcoin continue lower, or are the bulls still in control? Alongside this, we're going to be discussing the total cryptocurrency market cap as well as the Bitcoin dominance chart moving into the upcoming months. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion. Pure raw TA. If that is the kind of content you're interested in, join us over on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Not only will we get access to all of our trading setups, you'll get access to our group chats, our general chat, trading chart and education chat, trade setup, news, help, and daily video chat. If you're interested in joining over 600 members, contact us in the pinned comment of the free channel right over here. Click my name or click these links to find out more information. Let's go ahead, guys, and jump in. So as we said at the start of the video, we're going to be discussing the short term in extensive detail, particularly this cluster of price action over here. What is happening within this range? Will Bitcoin continue upwards, or are we going to see an extended correction to 60k? We're going to be running through the technical and the structural data to answer those questions. We'll also zoom out and talk about the higher time frame context, go over to the total cryptocurrency market cap, total altcoin market cap, and of course the Bitcoin dominance charts. Let's start, however, on the market data. 24-hour volume, let's go ahead and take a look, up 34.28%, not sitting all that high. We're only at 158 billion, so a pretty big increase of 30%, but it does tell us that volume this week has been generally low, and we did have quite low volume in yesterday's period as we were coming up to retest that $67,000 region. If we do take a closer look really quickly at that $67,000 region, we saw many hours where we remained at that level. We saw about 6 or 7 attempts to break over 67,000, but ultimately we did see the price correct underneath our short-term uptrend, resulting in a correction back down to retest this 64k region. And if you do recall from our prior video, we told you guys resistance is resistance until it is not. And although we have seen a nice move upwards, this was not the time to enter longs. We were waiting for validation over 67,000 for new long entries. In fact, we told you we were taking profits on our long positions from longs we took over here, down over here, and all the way at 60,000. So we did see again a bit of consolidation, a bit of compression, and with that, overall volume generally does decrease. Liquidations, however, did increase 66%, sitting just shy of 200 million, with 156 million coming from long positions, of course, as Bitcoin tumbles toward the downside. Let's go ahead and take a look at the broader markets. The Dow Jones is now again the DXY is continuing toward the downside, breaking underneath that key level of support at 106. We are still now looking for a correction towards our zone of confluence of the uptrending 2-month-long uptrend and yearly neckline of support. Again, a loss of this level will result in a correction on the higher time frame down to 103. For the bulls to get back into control over here, for the DXY to continue upwards, we do need to clear over 106.5 at this local high, and the price will continue to 107. Moving over to the broader markets, the S&P 500 still looking pretty good. Again, 1 day and 22 hours remaining on the weekly candle. Ideally, we would like to see a break over 5,100. However, like we said, provided a weekly candle remains above 5,000, the high time frame strength okay, is still intact. We lose that high time frame strength if we close a weekly candle under 5,000, as that would determine a directional move toward the downside, resulting in a correction to that 2021 high point. Until then, provided a weekly candle is able to remain above 5,000, expecting a continuation back toward the upside. Exactly the same thing goes here for the Dow Jones, expecting that continuation toward the upside, provided a weekly candle can hold above this 37,700 to 38,000 support level. Failure to do so will result in a correction to the 2021 high. So without further ado, guys, a quick word from Bitget and BingX, and we'll jump into the video. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and get stuck into Bitcoin. So, like we said guys, in the last 24 hours, we have seen a bit of volatility. We have seen a correction on the short term, resulting in a rejection from that major $67,000 short-term resistance and the uptrending diagonal trend line. So zooming out very briefly, again, the $67,000 region was going to be that mid-level of resistance, which we did need to break above to see a continuation up to 73. The 67,000 is that last line of resistance, preventing Bitcoin from going higher, and if we are able to break above this level, we should see a directional continuation on the higher time frame up to 73k to retest the upper range of our high time frame horizontal consolidation. Now on the daily chart, we did see that RSI flip positive and break through. However, even with the positive shift in momentum, Bitcoin failed to get above that key horizontal resistance of 70,000, resulting in again invalidation of that positive momentum shift and a short-term correction. So that was our first attempt at breaking through, but we failed on that attempt. But that doesn't really take away from the structural levels we are paying attention to. If we do come down to a smaller time frame and take a look at what is happening, at the moment we have identified a key level of resistance. This resistance is now going to be the 67,000 region, which acts as a trigger point for a continuation. So we do know if we want to see the bulls take back control on the higher time frame, we need to get above 67,000 for a directional continuation upwards. But currently, of course, we are sitting underneath 67,000. So what does that mean? Are the bulls in control? Are we expecting lower? Let's discuss. So right now, what we can see is we have had a uptrend that lasted around about 6 days. This is around about 6 to 7 day uptrend, so a weekly uptrend. What we are looking for the bears to really step back in and take full control of the price action is going to be for the price to fall underneath this $62.8 to $63,000 region. A loss of this area of support would tell us that we have now seen the price action drop underneath the base of the last 6 to 7 days of uptrend, or where that uptrend was established from. This would suggest significant weakness and that the bears or the sellers are back in control of the short-term price action. So provided this area at 63.3 to 62.8 is able to hold as support, we could see again reversals developing from this point to continue the price toward the upside. So on the short term, the bears are still not in control if we do see a breakdown this level. However, that is when we are now looking for continuations back towards our range low, our potential sell side liquidity, our potential $60,000 deviation range, or any price point between, again, the lower and upper range of our high time frame support at 60,700 to 60,000, this lower area of support. So until then, again, we have seen a short-term correction. However, the key structural levels of support that are keeping this trend intact are intact. We have again, okay, we have a lower high, or should we say a higher low over here, okay, from a higher low over here, we have our initial low over here, and now we've developed another higher low. So we do have a overall uptrend developing over here on the mid time frame, which could develop into a continuation upwards, provided this area of support is able to hold. So assuming we do hold support there, we are expecting continuations into the 67 and eventual break of that 67. If we're looking at short-term resistances continuing from that level, of course, we do have 69,000 as a short-term resistance. The reason being, of course, 69,000 was the prior 2021 high. It is always going to be an area of resistance. And then, of course, we do have that 71.3K level, which is an area we did retest for a few days before that extended downtrend right over here. And then we're moving into our range high resistance at 72 to 72.8 and upper. If we zoom down to a very small time frame, down to a 15-minute chart to take a look at what's happening on the price action, we can see over here that buyers are starting to slowly step in. Again, drawing out that main area of support we would like to hold above right over here. We can see, sorry, a little bit lower actually, around about this point over here, we can see that buyers are starting to step in as we do have momentum increasing, okay? And we have the price action dropping. This is an indication of a bullish divergence. It is telling us that the selling pressure is starting to dissipate. With that, we are watching the 50 EMA. We can see the 50 EMA is starting to compress against the price action. So it does tell us we are not expecting a rapid reversal to develop right now. We could see a little bit more of a drawn out downtrend or sideways price action before we do see the actual downtrend we are in flip toward the upside. That could result in the price action slowly bleeding into this range before we do see a continuation upwards. So I'm looking for two things. Number one, if we see the RSI breakdown of this trend line, that is going to be confirmation that we are seeing a further correction into the 62.8 to $63,000 region where we do expect support to be found. And number two, if we do see the price action continue to consolidate until the point the 50 EMA crosses the price action before we break the RSI, that will be validation that the short-term downtrend has dissipated and the short-term buyers are back in control of the price action, which would likely send the price back up to 67. So to reiterate those 2 points, for a bearish continuation, we need to see the RSI break down prior to the price action breaking over the 50. For a bullish continuation, we need to see the price action break over the 50 EMA prior to the RSI breaking down. If we do see the 50 break prior to the RSI breaking down, expect a continuation of 67. If you see the RSI break prior to the 50 breaking above, expect a continuation down to 63 to 62.8 where we are likely to find support. That is it for the short term. Let's now go ahead and zoom out to the higher time frame context. So moving over to the 4-hour chart, again, this is our high time frame range, a very particular high time frame range, and a very important high time frame range, as we have been saying for the last many weeks. We are still moving in this high time frame consolidation. It is a large consolidation of around 20% in depth, a directional move from the breakout of the range from our range low to our range high, applied to the breakout of the range, could take us into the $80,000 region as per our measured move, whereas a breakdown from the range from our measured move could take us as low as around 50 to 52,000. According to our VRPV, we can see we do have a significant chunk of historical order volume at that 52K region, and we do have a massive VRPV gap right below that 60K region, signifying that a loss of that region will develop into volatile, bearish momentum or bearish strength, just as a break above this region would develop into bullish strength and bullish volatility. So we are going to see a volatile reaction up or down depending on the directional break this develops into. If we apply that to a higher time frame now, we can see that we do have our trigger points at 73 being that local high point and the 60k region being the local low of our high time frame support range. Applying that to the macro context, a break up of the short term 2 month long range over here would send the price action into price discovery. Of course, price discovery will result in us being in an area of no historical resistance, which could increase volatility and increase momentum and send Bitcoin quite literally parabolic, whereas a break below 60 would do two things. It would make us lose a high time frame area of support, send us potentially down to our next area of support, and confirm this as deviation above the 2021 high, which could massively impact the high time frame trend. So it does have utmost significance in terms of where Bitcoin will go next and what macro implications will have based on what happens on this chart. At the moment, again, we have to focus on what has happened in the short term and expand that to the higher time frame. Moving over to the total cryptocurrency market cap over here, we can see, like we said, guys, provided the total cryptocurrency market cap is able to maintain above this area of support, we are bullish. We are technically going to be bullish. So only if we drop below here and close a weekly candle underneath could we see a correction to that 50 EMA, and this would be very, very bearish. Now, the reason I say that is, historically, guys, when we break above this dead cat bounce high area, okay, we're going to go draw it out over here. When we break above this dead cat bounce high area, which you can see over here, we have historically never dropped below it again after breaking above on the monthly chart. We have done that. We have broken above on the monthly chart. So if we were to see a break below here again, okay, this would be something we haven't seen based on historical data occur before. And this, from a structural perspective, not only just from a historical perspective, would actually be quite bearish, as it would signify an inability to sustain the uptrend above a key yearly level of resistance, which will result in the price entering a high time frame downtrend. Until that happens, however, we are expecting bounces and continuations to new highs. Moving over to Bitcoin dominance, again, Bitcoin dominance's chart is looking pretty primed for our altcoin season. We do need to see two things for our altcoin season. One, we need to see Bitcoin dominance fall, okay? Altcoins gain against a Bitcoin pair. If Bitcoin dominance falls, this generally results in an alt season. But for the second point of that, we need to see the total cryptocurrency market cap increase as the Bitcoin dominance chart decreases for us to get that altcoin season. Historically, we have seen Bitcoin dominance drop to around 40%. During that drop is when we have seen the altcoin seasons of the bull runs. And as we approach and reach the 40% range is generally where Bitcoin actually tops out at. Now, if we were to see Bitcoin break above this level, this could indicate two things. Number one, Bitcoin will gain against altcoins, signifying altcoins are not yet entering their altcoin season. And number two, it could signify that the market is going to enter a new macro downtrend, as if Bitcoin dominance rises aggressively when the total altcoin market cap is dropping. This is going to signify alts are bleeding off aggressively, and we generally see that happen as we enter macro downtrend. So pay attention to those things, guys. Thank you for tuning in. I'll catch you guys in tomorrow's video. A quick little word before we do end. A lot of you have been telling me, whether it be on YouTube or Twitter or whatever, that you can't access Bitget or BingX. I have gone ahead and partnered up with Bitunix, sorry. You can go ahead and check this exchange out. It is non-KYC and it has no country restrictions. So anyone from anywhere can actually sign up to this without a VPN. So it's perfect for those in the USA who can't access Bitget and can't use BingX without a VPN. Check it out. It's essentially the same as Bitget, all the same features, everything you need for an exchange. Go ahead and check it out. Thanks for tuning in. Catch you guys in the next one. Bye.